we've got data coming in from SIAM today, the Society of Indian Automobile Manufacturers, and of course, as expected, there is a massive rise again in the automobile data. So I'm just reading the numbers right now as we speak. In the month of March as opposed to the month of February, cars have seen, or four-wheelers, passenger vehicles have seen a 4.7% rise to 2,92,000 units. That's almost, give or take, about 3 lakh odd cars have been sold in India, passenger cars. I'm not talking about taxis here. Of course, when you look at the data on two-wheelers, that is much higher. This figure is coming to about 1.3 million, 13 lakh is the data that has come in, as opposed to almost 12 lakh units sold in the month of February. Now, of this, and this is an interesting trend which I've noticed on the streets, and I'm sure all our viewers tuning in from India and especially the metro cities in India also would have noticed that SUVs, sports utility vehicles, have accounted for about 50% of the sales. Now, that's of course a fairly high number, given that the cost of or the price that the end consumer has to pay on SUVs is much higher. So, this is the number that is coming in from SIAM today. I've got with me in the studio now my colleague Rakesh Khar, Business and Economy Group Editor at TV9 Network, joining me. And I really want to start off by asking Rakesh, are these numbers, too good to be true month on month as we see them rising higher and higher? Are these numbers too good to be true? And what do they tell you about the Indian economy?
I think they're quite in sync with what's happening in the Indian economy, which is kind of a outlier when it comes to growth perspective.
Right.
I was just reading the latest approach paper done by the World Bank on global forecast, which sends out a very, very negative signal, which says that 2023 is probably going to be the lowest growth rate in comparison to 2009, if that is the benchmark, which was the recession.
For India or for the world?
For the world. I'm just coming, and then 2009 has been the worst year. It could probably beat that. Okay. And then it's also talking about 2020, which was the next worst year, if we can call it.
Of course.
And so that's the projection, which has just come today. It's an approach paper.
Right.
It's not fully ratified by World Bank, but it's there on their website.
Right.
And in that sense, the Indian growth story is obviously, it's already been defined as the bright spot, though all economic world think tanks have revised the data downwards, unfortunately for India as well. But I think two macro points. First of all, the consumption level in India for each product category is so low that it is bound to grow.
Okay.
And when you look at number of cars sold in India versus China, we are way below.
Right.
Of course, it has got lots to do with our per capita income
and
the way we are versus China's or US's per capita.
Right.
But the appetite and the aspiration is phenomenal. So in that sense, the numbers that we've seen for last year is also on account of the buoyancy because of post, the pent up on account of COVID. Will we sustain that? There are challenges on that. I think, there is a problem and there is division in terms of the opinion whether we will be able to keep the tempo on the numbers that we have achieved for all product categories, more so for cars, because there has been a lot of buoyancy. The good thing is that on the two-wheeler cycle, because two-wheelers is directly linked to what we call the rural economy. So in that sense, the rural economy has done pretty well, and that's the good signal. We'll have to wait and watch exactly how the numbers look like next year. But for now, it's a very, very positive outlook.
Okay. Now, talk to us also about, we know that FM is in Washington and there are multiple projections coming. In fact, IMF came with a projection yesterday stating that India's growth rate, though higher than China at 5.2, is likely to be at 5.7 versus our own internal estimates of 6.5% or so. Previously, World Bank had said 6.4, Asian Development Bank had said 6.3, or vice versa. Honestly, I don't remember the numbers that well.
Yeah, they keep
but
changing.
They keep changing. They keep changing. They come in such volumes, and this show today being so much about numbers, in any case, there are numbers all over, flying all over. But, if the auto sector sort of were to represent the growth driver of the Indian economy, in that context, a 6%, 6.5% growth, what does it mean for the auto sector specifically, given the fact that this year alone, and again, I've got numbers here, Rakesh, we've got if I talk about the financial year, not just the numbers of March that I just spoke about briefly, for the financial year, we've sold almost 4 million cars in India. 38,90,114. Those are the number of cars sold, manufactured in India, sold in India. Now, part of this, of course, could also be the export market, which has incidentally reduced. So, overall exports have come down in passenger vehicles. But a year-on-year if you look at a March to March year-on-year comparison, numbers have grown 14%. Vis-a-vis our projected economic growth at about 6.5%. What does this tell us?
I'm an eternal optimist, but I must quote from the industry leaders who themselves in the car passenger category have said that it would be difficult to sustain this kind of growth next year. There are a variety of reasons for that, as I mentioned, the global outlook and the fact that we may not be able to keep, and the numbers for the overall economic GDP are falling every day in terms of the estimates. So Government of India has repeatedly said that it's bound to stick to the 6% number, which again is a very positive number. But auto leaders, especially the passenger car leaders, have projected, if we use the term guidance like you used in the IT sector, that we will not be able to sustain the growth at the level that we have done over the last year.
Right.
Which is still good news.
Right.
I think, if we're not able to do 14%, we have to do about 10%. That's a positive number.
Okay, so stay with us, Rakesh. We've also got Abhijeet Sinha joining us live. Abhijeet, of course, is the National Program Director, Ease of Doing Business, and he's also the Director of National Highway for Electric Vehicles. So, Abhijeet, I want to actually throw some numbers your way as well. Of course, we've seen the auto data that has come in today, and this is across both four-wheelers as well as the commercial vehicles, as well as passenger vehicles, four-wheelers as well as two-wheelers, and all the cuts therein. And we spoke about SUVs as well. But I want to specifically come to you on electric mobility. And about 2-3 days ago, we saw that the electric vehicles in India had breached the 1 million mark. Now, again, if we were to break this down, we were talking about, I think, some 62% coming from three-wheelers, 34% coming from scooters, and about 4% coming from electric cars in this overall mix of 1 million electric vehicles that were sold last year. Now, all industry analysts, experts that we had spoken to earlier were really betting on FAME 2 to continue. Now, this was a policy initiated by the government to help reduce the fairly exorbitant prices of electric vehicles in comparison to their, traditional fuel, petrol or diesel counterparts. So, I want to specifically, ask you to help our viewers first understand what was FAME 2 versus FAME 1 and the likelihood of FAME 3 coming out. So, we'll start by, helping us understand what was FAME 2 and what's the real logic, rationale behind the government possibly phasing out that, that policy which gave a 10,000 crore rupee impetus to the EV sector.
Good evening, and I believe I'm audible to you.
You are very much loud and clear.
It's a very good decision to discontinue FAME at this stage of time. This is a very strong statement which I'm putting up, but it is actually a gradual development of policy from where the electric mobility industry is automobile itself. And auto industry, when it started its electric venture, they were a bit difficult to understand which thing should be compared with what. So electric vehicle compared to a non-electric vehicle, fossil fuel or diesel or petrol vehicle is a bit unfair comparison. Ideally, after spending a lot of time in FAME 1, FAME 2, I can quote from 18, 19, 20, 21 and 22 budget speeches that gradually government went and tried to improve and extend some support to infrastructure, then production link, then when it is required in last 20th budget, 2020-21 budget, it also announced a certain amount of tax exemption to people who are buying it. So when you are giving all these, what do you expect in return? Is a high growth sale and also transition in people's life, the people adopt it. But policy, since it's growing, it will always grow into three different parameters. One, which is very well articulated, is production linked, which we now call PLI, production linked. It is focused on the manufacturing. Second is pre-sales. Pre-sales is you are going to buy as a viewer and you are getting in subsidy, so your price is subsidized. Third is the actual displacement. So I think the Indian electric mobility industry has now reached on the third phase, where the actual displacement is more than important than anything else. And actual disbursement model is not FAME, it's not subsidy, it is like carbon credit. You buy a vehicle, you drive certain kilometer, which you could have driven on fossil fuel. But since you have driven on electric, a certain amount of direct benefit is given to you. That is not subsidy. That is not on the manufacturing support. And in gradual expectation, if you will see the reform statement of government, this government is proven to be a very strong government for doing reform. One very important example, because electric mobility cannot operate without infrastructure. And infrastructure is like petrol pump and charging station. We compared an electric car with petrol car or diesel car, but we never compared a petrol pump with the charging station. And that is where it comes that if we could have done that, if we could have started this bit before, then we would have more highways which are electric, we would
That's
have
right.
more cities and more transmission and more routes which are electric supportive. This gives more confidence to the people, and user changes their mindset. Now user is not bounded to buy electric vehicle. With the emergence of new fleet operator like Blue Smart and other who are 100% electric fleet operator,
Yeah.
they started giving electric vehicle to people without buying it. So the load of buying electric vehicle is now the next pattern change in the automobile user, and this load is asking more and more. Now we are operating Delhi, Jaipur, Delhi, Agra, Delhi, Chandigarh, all these cities, and their communication, their interstate mobility is also having a new alternative, which is electric. With this change, the comparison of petrol pump and charging station came evident. And with the pilots, which we have been doing, like National Highway for Electric Vehicle, we compared a petrol pump with a charging station. And this also gives a lot of boost to the investment into electric mobility, because each electric mobility investor is not predetermined to invest into manufacturing or to invest into fleet. They also come as a neutral investor, and neutral investor always look for the profit. And during these 7 8 years, electric mobility did not proven to be profitable, except certain exceptions. So our idea and the government, you can say, thought process is now in that direction, where manufacturing has been given enough support, people have been given enough tax exemption and other thing. Now it's time to move on the actual displacement. And actual displacement is giving you comparison that you are going from your city to another city. You asked for an electric bus, it's available. It's on a 60% lesser price available for a seat. If you ask for a car electric, that's also available. You want with driver, you will be getting with driver. We want without driver, you are getting without driver. So the load which is changing is dependent on the infrastructure, and the comparison between petrol pump and electric charging station was very well defined in 2018 by Power Ministry, that there is no license required. And this is a very big message. Petrol
Right.
pump is still a license activity. Charging station, setting up a charging station as big as petrol pump is not a license activity. Since you are going to set up, you only need three things. You know what is the layout and designing and the detailing of the charging station. Second, you know the financing spectrum should be there to support you when you are setting up. And third, you must be knowing that how much a charging station is going to earn for you. BJP, all these three things, detailing, financing, and the earning, is very clear and available in the market for petrol pumps, but not for charging station. With this bold reform in 2018 of Power Ministry, Government of India very clearly given a site that set up and do your business. Private fleet operators with subsidy, without subsidy, has started doing their business. This gives a very positive outlook. People who are agnostic of the manufacturing or the fleet operation, they also are coming as an investor in the sector, and it is rising because profitability is very, very clear and very sorted.
Right. So I want to actually understand from you a little more in detail. So, of course, you're saying that enough subsidy has been given to the manufacturers of electric vehicles as well as the consumers of electric vehicles. Not as much has yet been done, and that is in a course correction mode on creating these electric highways and having more charging stations available and making them a profitable business model. I'm totally in sync with you on that, Abhijeet. But, the conflict in my mind right now stems from the fact that we are actually not talking about a chicken or egg situation. We are talking about a chicken and egg situation. So the point is, if you take away the subsidy from the manufacturers, the price of electric vehicles shoots up. If that shoots up, you have lesser takers to actually go ahead and make those expensive purchases on electric vehicles. And by that time, if you're building a highway which is going to provide enough charging stations, but there aren't enough takers or enough visitors coming to those charging stations, it doesn't become profitable. So don't you think it's a little premature to withdraw the FAME 2 subsidy altogether rather than phasing it out gradually?
Very, very nice question, because this is the very prime oversight which this withdrawal gives
Exactly.
everybody and anybody. If you address the pocket of the user, which is using a nice engine right now, diesel buses or diesel trucks, they have a certain amount to be paid for a distance between certain cities and also inside the city. This amount, when it is compared with electric, it is already half. But the capital acquisition cost of an electric vehicle or a bus or a truck is very high. This is why the FAME subsidy on the manufacturing and other thing were given. Now, instead
Sir,
of
I
having the
completely agree
manufacturing,
with you as far as commercial vehicles go. I understand the business model for commercial vehicles, right? Because at the end of the day, you're paying a subscription, you're buying a ticket. So it's public transport. You're not really owning that asset as an individual. But I'm talking more in the context of, let's say, the Niti Aayog set vision for 2030, where we say that we want 70%, 70%, if I remember correctly, or 80% of our two-wheelers to go electric and about 30% of our cars to go electric. I'm talking purely for the purpose of a prospective buyer of not a commercial, but a passenger, a consumer-driven vehicle of electric mobility.
so for an example, if you are paying 80,000 rupees to buy a
Yeah,
two-wheeler and there is a certain amount of subsidy, if
yeah,
this subsidy is drawn, your price goes 1,20,000 rupees. But
that's
at
right.
1,20,000 rupees, when you are driving, you are also getting a certain amount of carbon credit, which is now being introduced together. The
Right.
PLI scheme continues to be supporting the manufacturing sector so that the manufacturing increases and meets the demand. Manufacturing increase and the sales increasing, not depending on the initial price slash which you were getting because of PL, which because of fame,
Yeah.
is the only difference. So if I drive 100 kilometer every month, I am also getting benefited out of it. This benefit is coming to me directly. Earlier, it was coming when I was buying an electric vehicle. That's the difference.
So explain to me, how does this carbon credit sort of, get implemented at the end user level? What is the kind of offset that one gets in lieu of the carbon credits that you generate by buying as well as driving an electric vehicle?
This offset is, as of now, the conceptual design and the conceptual thought process of bringing carbon credit is also connected with the grid, and it is also directly connected with the tax structure which we employ on the uh, oil import bills. So what amount of energy you would have consumed if you had driven that particular kilometer on fossil fuel is
Yeah.
directly involved into deciding that carbon credit per kilometer. The kind of vehicle, the vehicle consumption, its mileage, everything is considered into that calculation.
Okay. My colleague Rakesh is sitting with me in the studio. He's got a question for you, Abhijeet. Rakesh.
No, before I have a question for him, I just wanted to understand, someone has to pay, there are no free lunches, Abhijit, isn't it? You know, at the, at the macro level, it's very good to say that everybody should be invested in the idea of moving and, getting into the displacement and paying for it. But from a consumer perspective, again, I'm repeating what Kartik said, industry, it's a new industry, it has its own challenges, it's capital intensive, and there are concessions. But how do you take away the expectation of the industry that if I have to grow this segment, I must be subsidized?
Expectation is divided into two places, two segments. One, where I buy a vehicle. Second, I only use a vehicle. When it comes to only use a vehicle, it's more infrastructure and the PLI is more important than subsidy. That is proven. All large vehicle and intercity transport, that segment was not very helpful with the fame. Second, if I go to buy a vehicle, when I'm buying a vehicle, then definitely it is prima facie going to look like it is going to go up. But soon, when you are using the total cost of ownership and the total cost of running that electric vehicle, if it is clubbed with a benefit which is not being paid directly on the same side, but it is paid on the PLI side to reduce the cost. You must have heard recently our road transport and highway minister saying that electric vehicle price and the diesel vehicle price, two-wheeler, three-wheeler at least, is going to be very soon equal. That has an economics behind it. That vehicle today is being sold with batteries. Tomorrow it will be sold without batteries. So battery coming on subscription itself reduces 30% of the cost. So such definite models which are giving and which are reaching to the user a bit late, a bit after the displacement, after the actual traffic or actual sales has already occurred. That's called post sales. Right now, all subsidy model are pre-sales at the time of manufacturing, at the time of sale. Post sale is the mature market, and India is now reaching to that mature market where what you create, what you build, what you manufacture, government is not going to get into it. Government is not going to subsidize you for this. But when your product is taken by the user and user is going to use it, then in different manners it can be given. Be it a battery subscription model to ownership of battery. If the cost of the vehicle is going up, you may still reduce it by giving battery on the subscription. That's why this year in the finance minister's speech, it was very very clearly explained that India is going to bring the battery swapping policy, and the draft also came within 90 days of the announcement, and now it is almost on a final position to give everyone who is buying a vehicle a 30%, 40% slash on the pricing. So no matter how manufacturing is going to happen, how manufacturers are going to take it, but users are going to get benefited. From the manufacturer side, I agree with you that it is not meeting expectation, because whenever you give subsidy in any economy, it's a kind of dependency developed for a year.
Rakesh, you want to add to that?
Yeah, I would say that it's a very interesting debate, Kartik, because what's happening that, someone has to pay for this new industry that has to take shape.
Yeah.
And Government of India has mandated itself to meet the transition.
Right.
And there's a huge cost to it. But subsidy as a policy, as instrument of policy, is coming under scrutiny globally. There's a book which has been released yesterday by a well-known economist in US, incidentally called Ashok Modi. It's called Broken Reforms in India, which is centrally questioning the PLI scheme.
Yeah.
It is questioning PLI scheme, linking it to the political economic architecture in India. It makes this point, though I don't agree with it, but it says that this is again a reason for Government of India of the day to give a subsidy to corporate India to fatten its profits.
Yeah.
So, when PLI, which is being hailed here in India and by a section of the global world for giving a boost to manufacturing, is being criticized. And if you look at it in context, this argument cannot be completely, so to say, thrown away in the dustbin. Because Government of India, a Modi government gave corporate tax concessions. So if you see systematically, that was one big historic reform.
Right.
Second is that the PLI scheme, it's a huge incentive.
Right.
Third is incentives for manufacturers, like we mentioned in the EV category. So put together, I think Government of India has its limited resources, and we are in an election year. Increasingly, how it is dealing with the corporate world in terms of how is it facilitating the corporate growth in India, which is again a valid point, because if you don't have private sector investment, driving the growth, we will not have economic growth.
I agree with you, Rakesh, but I think, just to sort of, if I may, to sort of bring back Abhijeet's point on this, I think what he's trying to say is that there is still enough incentive given to the sector, except that instead of it being a push, it now becomes a pull where you take away subsidy from the manufacturer and let the manufacturer sell it at the retail price, and you sort of bring in reforms on the supply side of battery swapping, electric charging infrastructure, etc.
I think an interim solution could be to sort of say probably halve the subsidy for the manufacturer, sustain the tax incentives for the consumer, and ultimately the government should prioritize its investment in building the infrastructure for the EV setup. That's what he calls displacement cost.
Right.
So I think if that is done in a judicious manner, we probably stay committed to the course of moving from fossil to the energy efficient mobility. At the same time, also not come for criticism of unduly fattening the corporate sector profitability, which in this case is not yet happening for the EV cars.
Last word to you, Abhijeet, before we wrap this up. 30 seconds, if you can just quickly react to what Rakesh is saying.
Absolutely agreed with his views, and also this policy of subsidy is not only in India, across countries, across globe, it is under scrutiny. If it is not now being removed, it is going to make the industry more dependent on it. If industry will get more dependent on it, this will be a continuous cost for Government of India. And it will become another Department of Health and Department of Education, where if you're not going to assure the profitability, the international market and the investors market, they also look at it that how long government will be able to hold it. We have a couple of examples where subsidies were given for a period of time and then it did not continue. If it was government tried to remove it, the industry collapsed. Not in India, it happened outside India. I do not want to name the country, but it happened this way. So for us, you have absolutely got it right that subsidy will still go. Incentives and the push and whatever support can be extended to industry will continue going, but not to manufacturer. Sometimes the half is a good idea, brilliant idea, but to users it is still reaching. User is requiring a very smooth lineup, and it is also the industry also has to grow one more step ahead. When you are going and using an electric vehicle, the power which you are going to take from whichever source is also need to be solar. So solar, the entire sector of solar is also looking at a certain subsidy. When we give and distribute these subsidies to in right amount of transition, then only we achieve to net zero. And for doing this, we need to look at it that we cannot concentrate entire amount to one of the sector or one particular segment of the sector. It has to go to solar, it has to go to user, it has to go to battery development, it also has to go to infrastructure, then the fleet operator. Right now, there is no subsidy to fleet operator. It's shocking. And fleet operator are those people who are giving you vehicle without you buy a vehicle. So transition, if you are talking about, it's not one person. It's a multi-stakeholder transition, and all stakeholders need to be for a certain period supported by the government.